Hey everyone, welcome back to Corporate Decoder. Today, China Evolution Equity Fund CE just filed its semi-annual shareholder report, and I am seeing some interesting sector plays and fund performance trends that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The fund is investing heavily in industrials and information technology, and I want to see if these bets are paying off. Let us start by looking at the costs for investors for a hypothetical $10,000 investment in the investor class of the China Evolution Equity Fund. The cost over the 6 months from November 2025 to April 2026 was $79, which works out to 1.40% of the investment. This gives us a baseline for how much it costs to own a piece of this fund. Now, for some fund statistics, the total net assets for the fund were $97,089,000. That is a substantial amount of money being managed. The number of portfolio holdings is 64. This means the fund is diversified across many different companies, which can help spread out risk. The portfolio turnover rate is 50.9%. This means that about half of the fund's holdings were bought or sold over the year. A higher turnover rate can sometimes mean higher trading costs for the fund. Let us dive into what the fund is invested in. The sector allocation shows where the money is going. Industrials and business services make up the largest chunk at 29.8%. Information technology follows closely behind at 24.2%. Then we have consumer discretionary at 11.0% and materials at 10.0%. Consumer staples is at 5.9%. Real estate at 4.3% and energy at 3.5%. Healthcare is a smaller slice at 1.9% and communication services at 1.6%. Lastly, other holdings make up the remaining 7.8%. This breakdown shows a strong focus on companies involved in building and making things, as well as technology. Looking at the top 10 holdings, Kingboard Laminates Holdings is the largest at 4.7% of net assets. Unimicron Technology is next at 4.5%. Yantai Jereh Oilfield Services Group is at 3.5%. Yunnan Aluminium holds 3.0%. WUS Printed Circuit Kunshan is at 2.7%. H-World Group is 2.4%. Loads and CALB Group are both at 2.3%. China Jushi and Weichai Power round out the top 10 at 2.2% each. It is clear the fund is concentrated in a few key companies, especially within China. Now, let us look at the I class of the same fund. For a hypothetical $10,000 investment, the cost was $58 or 1.03%. This is slightly lower than the investor class, which is expected for institutional share classes. The total net assets remain the same at $97,089,000, and the number of portfolio holdings is also unchanged at 64. The portfolio turnover rate is also the same at 50.9%. The sector allocation and top 10 holdings are identical to the investor class, which makes sense as they are part of the same overall fund strategy. Shifting gears to the financial highlights, we can see the net asset value per S-share for the investor class. For the 6 months ended the 30th of April 2026, the net asset value ending was $18.05. Looking back at October 2025, it was $14.19, showing a significant increase. This means that for every share held, the value has grown considerably. The total return for the investor class for the 6 months ended the 30th of April 2026 was a very strong 28.65%. This is a great return for any period and especially for just 6 months. The net expenses after waivers for the investor class are 1.40%, which matches the cost we saw earlier. For the I class, the net asset value ending on the 30th of April 2026 was $17.72. This is also up from $13.98 in October 2025, showing similar positive performance for this share class. The total return for the I class for the same 6-month period was 28.89%, very close to its investor class counterpart. The net expenses after waivers for the I class are 1.03%, aligning with the lower costs we noted for this share class. Moving to the portfolio of investments, this is where we see the actual companies the fund holds. A significant portion, 79.5%, is in China. Within that, common stocks make up 37.9%. Some of the top holdings here are CALB Group, H-World Group, Kingboard Laminates Holdings, and ZTO Express Cayman. These are in industries like electric vehicles, hospitality, and e-commerce. Another big chunk of the China allocation, 41.6%, is in China as shares. This includes companies like China Jushi, Weichai Power, and WUS Printed Circuit Kunshan. These companies are in sectors like building materials, heavy machinery, and electronics manufacturing. The total value of Chinese investments is $77,145,000, with a cost basis of $59,096,000. This implies a nice gain on these holdings. The fund also has 4.1% invested in Hong Kong with companies like Tectronic Industries. There is also 9.9% in Taiwan, with holdings in companies like Lotes and Unimicron Technology, which is a major player in the semiconductor supply chain. Additionally, the fund holds 6.7% in short-term investments, specifically in money market funds like the T. Rowe Price Government Reserve Fund. This provides some stability and liquidity. There is also 1.7% in collateral for securities lending. This is a common practice for funds to earn a bit of extra income. Overall, the total investments in securities amount to 101.9% of net assets with a cost of $74,654,000. This indicates the fund is fully invested and slightly leveraged, which is typical. Looking at affiliated companies, the fund invests in T. Rowe Price Government Reserve Fund and T. Rowe Price Treasury Reserve Fund. These are essentially cash accounts that generate a small amount of investment income, a positive $85 for the period. When we look at the statement of assets and liabilities, we see total assets of $100,969,000 and total liabilities of $3,880,000. This leaves us with net assets of $97,089,000, which matches the earlier figure. The net assets are made up of $7,846,000 in distributable earnings and $89,243,000 in paid, in capital. This means a good portion of the fund's value comes from realized gains and retained earnings. In the statement of operations for the 6 months ended the 30th of April, 2026, investment income was $344,000. Expenses, however, totaled $453,000. This resulted in a net investment loss of $109,000 for the period. However, the fund saw a significant gain from realized and unrealized transactions. Net realized gain was $7,315,000, and the change in net unrealized gain was $12,472,000. This combined with the investment loss led to an increase in net assets from operations of $19,678,000. This is a strong performance despite the net investment loss, driven heavily by market gains in their holdings. The statement of changes in net assets shows an increase during the period of $33,404,000, bringing the total net assets at the end of the period to $97,089,000. This growth is a result of both operations and capital share transactions. The filing also discusses risks. They mention unpredictable environmental, political, social, and economic events like natural disasters, war, terrorism, and regulatory developments that can significantly affect the economy and markets. This is something all investors should be aware of, especially when investing in emerging markets like China, which can be more sensitive to these types of events. This report details the services provided by the investment advisor T. Rowe Price Associates, Inc. and its sub-advisor. They manage the fund's investments, handle operations, and ensure compliance. This is standard for actively managed funds. The board of directors reviewed the fees and expenses. For the investor class, the net expense ratio after waivers is 1.40%. For the I class, it is 1.03%. They also compared these fees to industry benchmarks. The report indicates that the fund's total expenses rank in the third quintile for the investor class and second quintile for the I class compared to their peers. This suggests the fees, while not the absolute lowest, are within a reasonable range for the services provided. The approval of the investment management agreement and sub-advisory agreement is mentioned, confirming that the board reviewed and approved the continuation of these services by T. Rowe Price. They considered performance services provided and costs, concluding that the fees are reasonable. Now, looking at these numbers, the China Evolution Equity Fund has delivered very strong returns over the reporting period, largely driven by market appreciation in its holdings. The focus on industrials and technology in China and Taiwan seems to be a winning strategy right now. The fact that their net investment income was negative is a bit of a concern, meaning the underlying operations aren't generating enough income to cover expenses, but the substantial capital gains more than made up for it. This often happens in growth-oriented funds, but it does highlight the reliance on market performance. The lower expense ratio for the I class is a clear benefit for larger institutional investors. For retail investors, the 1.40% expense ratio for the investor class is on the higher side, but the strong performance might justify it for some. My biggest concern is the dependence on market appreciation to offset the ongoing investment loss. What I am actually looking for is a consistent positive net investment income to supplement those gains, showing a more sustainable business model for the fund itself. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.